What's up, guys? Welcome back to another episode of Raw Stocks. This is Rustic. Today we're going to be taking a look at Tesla's chart on some high time frames. We're going to look at where price ended today, or actually on Friday, where price is likely to head tomorrow and into the rest of the week. Before we get going, don't forget to check out the links in the description below. We got a link to Gamma Edge where you can access some of the best options data. That's what we use on the Raw Stocks trading Discord. You can also find a link to the Raw Stocks Trading Discord itself. It's free to join as a regular member, hang out. We got a very vibrant Tesla community, as well as premium upgrades that are available as well, that provide callouts, additional tools, including a custom indicator. We also have the Quant Viper automated trades as well for day trades and swing trades. So if you want to check those out, the link's in the description below. But without further ado, let's jump into the charts. So I got Tesla one-day chart pulled up. It's the first one we're going to take a look at. A couple things we want to draw our attention to is the structure that we're seeing play out, and so a couple other things that we have on the chart here. So mostly what I want to identify as far as structurally goes is that we're more or less kind of trading sideways, right? Until we very clearly break above this level and hold above this level, which is at 290, 291 ish, right? We've wicked it, we've closed up at it, but we haven't broken up through it. So we want to see that with momentum on a daily chart till we break above and hold above that. Right now, the whale target has been 290, and so until we break above that with force, right now that's our resistance level. You also see there's a daily order block that's down below. We haven't broken below that, but we do have our consolidated range here, right? So there's our range. You can see we're trading sideways within that range. Now, a couple things that we have going in the favor for the bulls is we have the daily fair value gap. You can see that daily fair value gap was painted on that breakup candle from the 25th of April. Okay, we've come back down and we've tested that fair value gap and it's held as support so far. So basically what we're looking for is for price to continue to respect that fair value gap and break up through this resistance level. We do have high gamma levels up at 300 for the next couple of weeks. That should be our first targets. Above that, we can target the bearish fair value gap right here. And if we go ahead and we mark that out on our chart, that range is going to come at 309. And it's going to be the high of 325, and that's on the daily chart. Okay, our consequent encroachment of that is going to be at 317. So we could look for price to, if we break above that, push into that fair value gap. First time around, we're likely to reject it, come back down and test that broken level, and then see if we can push further up into this other fair value gap above at 342.49 up to 347.89. Okay, so that move might look something like this. Okay, we see a break up. We reject somewhere inside that fair value gap, come back down and test that broken level, potentially target that next fair value gap. Okay, above that, we do have an order block, internal order block here, and we have basically just a swing high, an internal swing high. So that could be our next level of liquidity. Be above both these fair value gaps, will be coming in at 367 more or less. Okay, we also have some gap fills above that. Now, if we reject and wherever that is, maybe we come back down and take this fair value gap out right away. Maybe we push up into that fair value gap. That level doesn't hold. We start to fall, right? Ultimately, what we'd be targeting on the downside is a retest of this fair value gap. Below that fair value gap, there's some gaps in here, right? Below that, we have our support level. And below that, we have our fair value gap, or our order block that could hold support at 200. I don't know if we're going to get back down there or not, but those are our downside targets. But again, I'm expecting that if we see that breakup move first, we'll come back down and test this 290 level and see if that holds its support. So things look a little bit more bullish than bearish at this point in time, but again, we're still inside this range. We're just on the upper end of this range. Anything down below 50% of this would be potentially a good long entry for some swing trades. If we used our fib tool and we just kind of look at this high low of this range, okay, and then we mark out 50%, and this is taking the wick highs on both ends, and we look at the equilibrium of that range, anything below 255.49 is a pretty decent long entry for some long-term trades, right? Then we come back down into discount. So anything between 255 and 203, which is a pretty large range in itself, is going to be good buying opportunities. So if we, again, use our fib tool and we look at that order block, we can even take that low of the order block at 191 and we go up to current price and we use a regular fib tool instead of the premium discount fib tool, we can get those additional levels and we could ultimately look to, again, take our long swing entries anywhere from 243.35. Next level down to buy would be 231.16. 222.18. Below that would be this order block here. So those are kind of a couple different entry points below equilibrium in discounted price. That would be good for long-term swing opportunities, whether that's share buying or whether that's, 90-day or, 6-month or 12-month options contracts. Those would be good swing opportunities. I don't think we're going to give up this order block at all, even if we did cycle back down. We'll jump into the 4-hour chart. The 4-hour chart shows a little bit more of a trend. We can see there. We can also see that we're just kind of flagging here Thursday and Friday. So not much big movement, or that's actually all day Friday. So near the end of the day, we're just flagging. We got that 4-hour fair value gap. We continue to see support in that 4-hour fair value gap. Okay, if that gets closed, we have a couple other fair value gaps down here that could hold. We also have that, again, that discount or that equilibrium from that range that we measured off at 255.49. So if we give up the fair value gap, could come down and test that equilibrium. But I'm looking more for a breakout again, back up to that 308. See if we can break through that 300 level on the first try. Because we're rejecting a little bit before it. No clear trend beyond that trend line we drew. And again, I'm not sure where we're at with after hours trading, but as long as that trend line continues to be respected, we can continue to see price push up. If we turn on our raw stocks indicator, our flashpoint indicator that has some moving averages, you can see we're above the weekly trigger, which is the purple line. We're above the daily trigger. We have the daily about to cross the weekly. We're above the 1-hour trigger as well. So we're above all our EMAs on our flashpoint indicator. Okay, and those can move price higher. We ultimately want to stay above the weekly trigger as that weekly trigger has started to step up. And we want to see that walk us up into this fair value gap or even higher. Last thing we'll do is take a look at the 1-hour time frame. 1-hour time frame shows very similar. Can adjust the trend line just a little bit. We can take that low there. And you can see it's kind of walking the daily trend with that trend line or that daily trigger. Again, you can see a little bit clearer picture where we're above the weekly, above the daily. So anything that drops down, we would want to see those trigger levels hold price around that 270, 272 range, even just a little bit lower if it swept the liquidity at 270.61, right? Either way, if we come back down, we want to see that hold the support. There's also a fair value gap there. Draw your eyes to that. So we want to see all those hold support to see that move up to 300 and above, giving up those levels, again, dropping down through the 1-hour fair value gap, which would be below 265, right? Could open the door, a move back up like that, and then a move down to equilibrium, and then potentially even lower. So that would be our bear case scenario if it started to look like price was unraveling here. Now, definitely doesn't look great on the 1-hour as far as just all these kind of sweeps on this level. But that doesn't mean we can't recycle back down, take this liquidity at 270. But we already kind of did that. You see, we popped down, popped back up, kind of ran these stops, came back down, right, and tested this fair value gap. So we've already done that once. Now we came back up to liquidity back here at that 290 level. If we cycle back down to this low, that's not a very good sign. We're likely to head lower again. Then we're below the triggers, and we'd be likely to test some of those lower levels as we dropped. And I guess we can just take a look at the 15-minute 15 minutes just going to show us a little bit more in depth on what we have going on. I'll take off some of our indicators here. And again, we're still just kind of in this consolidation pattern at the top, right? And what we really need to do is see price break and hold above 190, ultimately break out of the 295 high, right? And then we can see price run higher. Giving up this trend line wherever we are can lead to running at sell side down here at 270, 271, right? We know that there's liquidity going to be in the order block down here in these lows, right? But there's also some internal down here at 270 that could also just, and there's a gap there. That could ultimately be the stopping point before running higher. Kind of a fake breakout or a breakdown of the trend and then pop back over. Wouldn't be unusual to see that happen. But we've seen this breakout here on the 15-minute, and we want that to hold ideally, right? We don't want to come back down and test this 265. If we do, we're looking at 255, and then again, 244, 232, 223, and then this level down here at 219. I don't think that's going to happen, but we'll just have to wait and see. We do have FOMC coming up this week, some Fed rate decisions. So that's going to be the biggest news driver this week. Hopefully this has been helpful. Don't forget to smash a like, subscribe, share with all your friends. Help us build our raw stocks trading community. Again, don't forget to check out the links in the descriptions below. We also have some new merchandise, some Quant Viper merchandise that's brand new. So go ahead and check that out as well. And we'll see you guys on the next one.